G'day folks, Jim here from FX Charts. Thanks for tuning in. Monday the 5th of May. Well, the dollar had a brief blip of strength after the non-farm payrolls on Friday, but at the end of the day it was unable to maintain its gains once the market took a closer look at the participation rate in particular. So most things, most of the currencies finished up pretty much where they began, and there's not really an awful lot of change from a technical perspective. This week, though, we've got the ECB, we've got the RBA and Bank of England have all got interest rate decisions to make. Janet Yellen will be testifying to Congress, and there's a fair bit of data out elsewhere, particularly from China and also from Australia this week. So it could end up being pretty busy. So we'll go and have a look at the charts. And starting with the euro, from a technical point of view, there's not really a great deal of change. We did get the euro to drop down to just above 138 after the non-farm payrolls on Friday, but it bounced straight back, and it's sitting at 138.70 this morning, just below this 138.85 high of last week, which filled in the gap on the charts back to this previous Monday opening of about a fortnight ago. Now, the hourlies are looking mildly positive, so if we can break up through this resistance here, we could head back up towards this high here, 139.05. Go back to the 4 hour charts, 139.05, and then back up here is 139.66. So that was the March high, and since then we've really been chopping around rather aimlessly. Now, if we go further out on the weeklies, as I've said before, I'm kind of looking at this. If you look at the blue lines here, this rising wedge formation, and we go back to the dailies. So it's the top here is about 140. If we go through there, then there's a fair bit of potential upside. But I'm just wondering whether we're really likely to. The ECB are not going to like it above 140. If the ECB sit on their hands on Thursday, which the market generally expects them to do, then we might see a bit of a short squeeze for the euro. But equally, the market's expecting the ECB to cut rates in June. So I suspect the top side for the euro is somewhat limited. And I kind of like this wedge formation at the moment, and think that eventually, although we may test 140, we're possibly going to come back down here, eventually head down below 138. We maybe see the 100-day moving average down around 137.30 is support. And if we go through there, then we might head a fair bit lower, but that's somewhere off at the moment. So in the short term, I think probably for today, it's a London holiday, so not too much action out of Europe, I don't think. But once again, I think 139.05.10 will cover it on the top side, and I've been pretty surprised today to see it much under 138.40.50. Dollar yen. Equally, that got up to just about tested support, the 61.8% of this fall here. Got up to 103.01 on Friday, didn't like it up there at all, back down towards its lows at 102.20. That's minor support here now, down around 102 the figure. If we go under 102, there's a minor support down here about 101.85, but then the major supports are down around 101.5 and down towards these lows down here around 101.20-30 area. I don't think we're going to see much today. It's Golden Week in Tokyo, so with Japan out, I don't think there'll be an awful lot of action in the yen. And for the time being, I think 102 to 102.80, maybe 103, will cover it possibly for the next couple of days. Sterling. Well, that took a bit of a hit after the non-farm payroll on Friday. It got down here, tested the 200-hour moving average and the rising trend support, and bounced quickly back off there. It's back up at 168.75. As I say, it's a London holiday today, so I'm not expecting too much action. But further out, the 4-hourly charts are suggesting that we're probably going to remain range-bound around current levels. The dailies are not really suggesting much in either direction. If we do take out the last week's high at 169.18, I think it was, then we're possibly headed higher with the next major resistance obviously being at 170, and above that at 170.41 or so, which, as I've said before, is this high way back here in 2009. So there's not an awful lot to stop it on the top side, particularly once it gets through 170. And we've got some. We've got the Bank of England, as I say, on Thursday, and then there's some important data out later on the week on Friday. And if that continues the recent theme of strong UK data, then we may see cable push towards this sort of level up here. But until then, I don't think we're going to be doing too much. On the downside, it needs to hold this support here down around Friday's lows, I guess. That was at where was that, 168.20, that's right. And if it goes through there, then we get below 168, could come back and test this support down here, this FIBO support down around 167.60, but I don't think we're likely to see that in the next few days. Dollar Swiss, likewise, that's looking a little bit heavy, but as long as it holds this 87.40 support here, I think we're probably just going to remain in this sort of sideways choppy trade. If it goes through 87.40, then we're probably heading back towards this low at 87 the figure, but I'm not really sure. The 4-hour charts are showing possibly we may have some more downside momentum, and the dailies are pretty flat though, so I don't think we're going to be doing an awful lot, and it's really just going to track the euro for the time being. The Aussie. Well, the Aussie got down. It took out few support levels all the way down to the base of the channel on Friday. 92.01 traded. This morning it's been back at the post high is actually 93.04, which is actually just above this channel, but that's before the retail platforms opened. It's currently back where it finished the week at 92.75, and for the time being, I think probably just use the channel as a guide still. 93 the figure to 92 the figure covers it. A break of 93 might take us back up here to 93.1015, which was last week's high. I don't see that happening today, but if I'm wrong there, then we've got 93.75.80 will be the next stop for it. There's a bit of Australian data out this morning. We've got the services PMI. What else have we got? The TD inflation, ANZ jobs numbers, and we've got the Chinese manufacturing PMI later on this morning. So that's going to provide the direction for it today. There's a fair bit of data out during the week as well. We've got the trade balance and of course the Reserve Bank interest rate decision and statement tomorrow. Wednesday sees the retail sales and HSBC China services PMI. Thursday we've got the Australian jobs numbers and trade balance, the Chinese trade balance. And on Friday, we've got the RBA's monetary policy statement and the Chinese CPI. So it's going to be a pretty big week for the Aussie. 4-hour charts remain slightly positive, although they're not doing an awful lot. The dailies are probably looking in the other direction. My view is, as long as, I've said this before, as long as we stay above this red line here, which is about 91.85, that was the neckline of the previous head and shoulders. So as long as we've come back to meet that virtually, as long as we stay above it, then I maintain a long bias for the Aussie for an eventual look back up at this sort of 94.60 level. If we break 91.85, there's a bit of support down here at 91.50, 91.40, 100-day moving average and the rising trend support. But if that gives way, then I think we're probably heading it a fair bit lower. But for the time being, use the channel as a guide. So you buy it to about 92 and really you're a seller at about 93 on the day. And finally the Kiwi, which knows no bounds on the top side. It was the strongest currency last week. Did have a bit of a dive after the non-farms, but bounced back equally quickly. And it's sitting just below sort of 3-week highs here. This is an hourly chart. Now if it can overcome this sort of 86 3/4 level, then we're probably heading up to this FIBO resistance here at 86.90, 87 the figure. That's going to be a bit tough for it. But if we get above there, then 87.45, 46 is the April high that we need to look out for. There is some bearish divergence here though. So I personally prefer selling into rallies. The 4-hourly charts are positive, but they're becoming overbought somewhat. So I don't think we probably should expect too much today. There's very little data out actually until Wednesday when we got the New Zealand jobs numbers. The dailies are not really telling us much in either direction. So I suspect we're probably in for some more sort of choppy trade, generally below this 87.45 high. And I don't think we're going up there yet. Having said that, the RBA and Z have, they've got some more rate hikes in the pipeline. So the Kiwi is going to maintain an underlying bid tone, and I suspect that against the Aussie in particular, it's probably not a bad trade. Sell Aussie by Kiwi, but against the US dollar, I'm not really so sure. So look for today. I think 86.40 to 86.80 probably to cover it. So that's about it for today. Anyway, as I say, there's a fair bit of data out this week, particularly for the Aussie. So that could be a fairly interesting, fairly choppy. Today we've got from Europe, we've got the Sentix investor survey, and then later on we've got the US ISM non-manufacturing PMI. So those will be the highlights for the day. And there's a bit of data, as I said, out from the Aussie before then. We've got the job ads, the building permits, the TD inflation, services PMI, and the Chinese HSBC China manufacturing PMI. So that's about it for today, folks. Have a very good one, and we'll talk to you tomorrow. Cheers.